Welcome to SADTU Online Television. I'm your host, Nomusa Cembi. On the 9th of June 2023, the National Treasury and SARS published for comment the revised 2023 Draft Revenue Laws Amendment Bill and the Draft Revenue Administration of Pension Laws Amendment Bill. Draft bills provided the necessary legislative amendments required to implement the first phase of the two-pot retirement system. This announcement was warmly received by our federation, COSATU, because it is our federation that approached Treasury in 2020 and began negotiations on allowing financially struggling workers early access to their pension funds, as many were feeling the brunt of COVID-19. As an affiliate of COSATU and whose members have their pensions invested in the government employee pension fund, stand to benefit from the two-pot pension system. In the studio, we have our General Secretary, Comrade Mukwena Malilega, and our Legal Officer, Comrade Cindy Dilange, to shed light on this two-point system. Let me greet you, comrades. Good afternoon.
Good afternoon, Nomusa.
Good afternoon, Nomusa.
This two-point system, first of all, let's look at the issue of pensions. One understood pensions to mean that it is the money that one receives at the end of your working life. And now we are having this two-point system after the intervention of COSATU to ensure that workers receive this money before they retire. Can we first start at the beginning with UGS explaining to us what is this two-pot pension system?
Nomusa, let me thank you and greet our members wherever they are. We thank them all the time for the work that they're doing. And indeed, your starting point that the pension is the money that you receive when you retire. That's the purpose of any pension system, is that a worker saves the money, which we call a deferred income. And that particular income will only kick in when you retire because you have saved for that particular money. It's your money. You have saved for it. Now, even before we go to the two-pot system, we think we need to make this emphasis that the union has got no say on your money that you have saved. It is the decision of a member. It is the decision of any employee to decide what you do with this particular money because it is your salary that you said, from my salary, I will take 7% and save it. And your employer said, okay, you take 7%, and the employer, in the form of a Department of Education or government, put the 13%. So you have really saved your 20% of your own salary for your pension when you retire, when you need the money most. So the union has got no role. The union has got no say on whether you access the money or you don't access the money. Where the union comes in is where now we are being asked to facilitate your voice to be heard by NEDLAC, to be heard by the Treasury, having the Treasury publish this particular media statement to say now is the time for us to be able to make comments, which we have to make those particular comments, and we had to go to the members and say to members, what is your voice? What is your opinion? What is your view around this particular issue? So there are two pots. There's one big pot which will have 2/3 of your pension, and then they're proposing that 1/3 of your saving be in the another pot. So we can call it a small pot and a big pot. And the small pot is where you can access your savings whilst you are still working, whilst the 2/3, which is a bigger pot, that will only be applicable upon retirement. So you cannot have access to that other pot, which is a 2/3, which is a bigger pot. It's a small pot and a bigger pot. So there are two pots. So I would always advise, when you look at the amendments, there's a lot of terminology. There's a lot of words there. So for me, is that forget about the semantics. Just understand there's a bigger pot and a small pot. The bigger pot will retain your pension, which is a 2/3, and the small pot will then be what you can save in, and then you can access it while you're still working. That's as simple as that.
At the moment, the union conducted a survey amongst members just to find out, how members feel about this new development regarding their pensions. Comrade Cindy, can you just give an overview as to how members responded to this? How do they feel about this new system that is being brought to their pensions?
There's definitely an appetite among our members to access the funds. 77.5% had a desire to access, while 22.5% either said no, they do not want it, or they are not sure if they want it. Among those, 64% were women, which shows that there's a higher desire among women to access their pension funds.
We understand that this thing can start working on by the 1st of March. What is going to happen now? Are we going to take this to Treasury? What is the process?
As with any bill, there's processes to be followed. They called for public comment, which closed on the 15th of July. SADTU commented on behalf of its members. Now we'll wait if we are called, if we need to make an input orally. And then from there, they'll take all the inputs from various stakeholders, and then that will go on for further comment before the bill is passed as legislature.
To you, TS, you mentioned bigger pot and a smaller pot and all that. Do we have figures people would want to know as to, this, how is it calculated? Are they going to look at how much I earn? How do the figures go at the moment?
What the Treasury has now proposed basically was that, look, you have a totality of your pension, and out of this particular savings of your pension, the proposal is that 10%, which is a 1/3 basically, is that it must be put into this small pot, which you can then have to access it. So that is the limitation that you are talking about. So it's limited to that, whilst the 2/3 will not be touched because it is meant for that particular day when you retire. But they also have proposed the 25,000. Okay, as a figure that you may also access a 25%, 25,000. That also provide a limitation and so forth. That is the two things basically that we've been asked to comment on, and many other things that are in the bill, which basically to me are not necessary because those are legalistic issues that have got to be looked at by those who are administrating our pensions and those who are administrating the provident funds and so forth. There's a lot of legal terminology that is there. So there are those particular limitations. However, Treasury has opened it up to then say, what are you saying about being able to access the 1/3 of your saving into that? And then what are you saying if you were to limit that to 25,000 rands and so forth? Hence, our members have now responded and said, no, look, we want the money, but we don't want the 10%.
The members they want more than 10%, between 20 to 50%. Or if you look at the figure, as opposed to the 25,000, they want 75,000 or up to 100,000.
Although the appetite is there, we understand that there is a feeling of trepidation, but it's in the minority. How will this thing impact, first, the economy of the country?
Well, we need to look at it from different perspective. Let's look at it from a perspective of a member who says, I need the money. The member accesses 100,000. I'm just giving an example. The member gets 100,000. So basically, the member will still be contributing to the economy because it's consumption. It impacts on the economy. This time it impacts positively in the economy because the member is a consumer and then it's going to consume, and then maybe we can even get one job somewhere created because of that amount. That's a positive impact or implication of this thing. Let's look at your age. Let's say you are 63. You are left with 2 years of retirement. You want to retire. And then you say, I want that 10%. I want to access the 10%. It's not a lot of money. I will be able to manage because I'm just about to retire. Now, at 63 years old, what you're going to lose is almost like 9% of your savings if you take that particular 10%, because you don't have enough years to work to making sure that the 2/3 is fully replenished in a way. You don't have that time. You don't have that particular luxury of doing that. So we are taking just a small part of it. Now, that is an implication to the member who is about to retire. Okay, let's take a member who is, like, say, is still having 15 years to work. That would be about what? 35 years old. So a member will be about 35 years old, is young, and then has worked for 20 years and so forth, and say, I want to take the money. Yes, the member who is younger has an opportunity to still be able to work to making sure that the savings is still there, and therefore will be not usually affected, basically. So you compare those two. It is that the elderly you are and the closer for your retirement, you need to be careful about how much you're going to be able to access. We're not saying they don't have the needs. They do have their needs, but at least they should know that this is how it is going to impact on their ultimate payout when they retire. The younger one can still work for say 15 years, 14 years, will still be having an impact, but not that huge impact and so forth. So that is how it is. So economically, that is how it will impact on them, because the one that has lost, you know that when you're going to get your pension, it's also going to be taxed, by the way. So that tax on its own, it's also going to reduce what you are supposed to receive at 65 years when you retire at 65 years. So it has got both positives and negative in terms of the economy. But if we were to look at the bigger picture in terms of the fund itself, it will have an impact on the economy. But members are finding it very difficult to survive, and therefore they are saying they want to access their money. As a union, ours is to facilitate their voice, so that their voice can be heard at NEDLEC, their voice can be heard at the level of the legislature, and then we cannot say yes to them. So yeah, it will have both positives and negatives.
What impact will it have on the person's monthly contributions?
That would be a condition of service, because the pension is paid on an employer's portion and employee's portion. So that would not be affected unless the conditions of service is changed in the relevant bargaining council. So for now, the member will still pay the same monthly, but the only difference is that 1/3 will go to your savings fund and 2/3 will go to your retirement or pension fund.
But economically, if you look at it, the fund becomes affected. The GPF may not likely be affected badly, but the Provident Fund may likely be affected, like we have seen during COVID, how the Provident Funds have been impacted upon by the withdrawals and so forth, which means you might be, if you are not in a defined benefit scheme, because public servants are in a defined benefit scheme. And then when you are in a defined contribution, yes, you might be expected to pay a little bit more and so forth, but not in a defined. So in the GPF, we don't expect anybody to be asked to pay more. But there was another benefit, which I think we need to pursue as a union. It's a benefit of whether members would want to save more, a preservation fund, okay, at the level of the GPF. The GPF have worked on that, and I think when the rules change, it can afford those who want to save more in there, because there is benefit in saving together in a collective scheme than to be saving as an individual. So there will be no expectation from a member to pay extra, as Cindy has correctly put it. But maybe Cindy should also expand on the issue of the 1/3 part, on whether in the long term will the limitation to the member in terms of how much you can be expected to withdraw from that savings, not the retirement part of it. Okay. Maybe you want to come in, Cindy, on that.
How often can one withdraw from this fund? Can one withdraw every year? Can one withdraw once a month? How often can one do this?
So the initial seeding of the savings pot is coming from that percentage that members have desired to have more. But after the initial implementation of 1st of March 2024, members will be able to access there's no limitation in terms of the amount that they can access from their savings pot. But there's a minimal amount of 2,000 Rand. And members can only access it once per year. So if they have 200,000 in that savings pot, they are allowed to access it, and as long as it's once a year. They can't come every month and say, I want 10,000, I want 10,000.
You know, looking at the numbers of people who are accessing their pensions, and this can start working on the 10th, on the 1st of March. I think we have how many months? 8 months or 10 months to that time.
Yeah, roughly that.
Will the system be ready on the 1st of March?
Well, from my take is that once the NEDLEC have really dealt with this particular process, the 15th was the closing date of July, and the Treasury is under pressure, because as unions, our members have been putting us on pressure, to put pressure on Treasury to finalize this thing. If you were to ask a member, basically, the member would say to you, I want to access that money by the end of August this year. The member wouldn't want to wait for the March next year. They would want to access that. Therefore, that informs the Treasury, that informs NEDLEC, that informs us as SADTU, to then say our members would want to access that portion as yesterday. And therefore, the 1st of March next year, realistically, it is that, yes, it is possible that the Act will be promulgated, and therefore it will then be put in place by the 1st of March next year. It's a little bit longer from the members' perspective. it is it's also a little bit shorter for normally how legislation is done in the country. Legislation can take a year or 2 years to be finalized, but the Treasury is fully aware of the fact that the impact that members are having financially in terms of the cost of living is huge, and therefore it wants to finalize this particular bill as quick as possible so that members can have relief on their constraints that they're facing.
Hypothetically, say if every person who's getting pension were to say at one go they want 25,000, is it enough to cater for all South Africans who are saving, who are putting their money on pension?
If you say South Africans, it will not. We don't have that money in the pot to give for that.
I mean people who are saving.
Yeah, those who are savings. Yes. Yeah, no. Look, we have about 1.2 million public servants who may want to access 25,000 Cindy, 25,000 rands. And then if they were to access it by the 15th of March next year. And the question is, will the fund be able to can afford that? When you look at the calculations, you need about 30 billion to cater for the 25,000 for all the, if they were to do it. I know, I believe that the GPF is the right entity to give you that particular answer. But if you look at their annual report that they have published, which is public, it is that the GPF is at about 2.3 trillion rands, and therefore 30 billion it's achievable, it's reasonable, and they can afford to pay that 30 billion.
Let's move to another issue of SADTU. SADTU has for the longest time been urging its members and public servants to use their pensions to access housing, engaging on that matter. This new proposal regarding the pension, is it going to have any effect on our call for pensions monies to be used for housing?
The answer is no, Nomsa. It will not have any impact whatsoever on the government employee housing scheme, because the employee housing scheme is another investment, basically, that the GPF, allow members of the pension fund to be able to really have, a dignity in the form of a home, basically a house. I mean, that needs to happen. Majority of our members are the missing middle. And the missing middle don't qualify for NAFSAS, they don't qualify for RDP, and therefore they are just in the middle, and therefore they need to be assisted. And we think that their pension fund can assist them. I mean, you don't need a lot of money to invest, as the GPF, to invest in the government employee housing scheme. I mean, the initial investment that the government housing, the GPF has made through one of the private, South African home loans. Home loans was about 10 billion or 14 billion. Public servants have access to that particular amount. That is not what we wanted as SADTU, by the way. What we wanted as SADTU was that we want a scheme which will be administered by the public department, public service, like your GEMS, okay? And it will remain an entity in the public service where you can determine the interest rate that you want to charge. You want to disrupt this market of 20 years of a bond, and be able to have public servants accessing their money and be able to pay their bonds quicker and cheaper, for that matter, because there is no economic sense for anybody to be buying a car and pay for a car for 60 months, and then with the same amount, by the way, and then by the same amount you pay for 20 years. There is no sense, in doing that, and so forth. So there will be no impact. The answer is there will be no impact with this particular proposal on that particular one. In actual fact, that government employee housing scheme need to be implemented as a matter of urgency. I can say that yes, there is progress around that. We are negotiating. The government has come back to us to make some kind of a proposals at the level of the chamber, and we are engaging with those particular proposals. We are not agreeing with some of the proposals because the government still wants to bring the third party. The government still wants to bring the banks to administer it. And we are saying, let's simplify this issue. One, the banks would want to have high interest rates on the basis that they still have got to pay a middle person. They still have to pay for the distribution. They still have to pay for their marketing and so forth. We are saying this is the members' money, so the banks do not come in, because we're not going to apply for a loan at the bank. You're applying a loan directly from the government employee housing scheme. So one, you don't need a middle person to be paid. You don't need marketing to be paid. So therefore, that money that was supposed to go to the administration in the form of marketing, in the form of employing other people for distribution, the employees themselves who are in the government are going to access and process this particular application, like they do on behalf of the banks. Unfortunately, when you apply for a mortgage in a bank, you still have to submit your subsidy forms to the government, and then the employee who works there for the public service still have to process this particular guarantee that needs to be sent to the bank. So it's the same way. So instead of taking to the bank, it's going to the next file. It is not going away. You just take it from this file, put it into this particular file, and the member gets their money. And then they're then able to build, they're able to pay whoever is built, and then they go on. It's about dignity. So we are saying don't complicate it by bringing a funder. We don't need a funder. A funder is the GPF, and the GPF must fund this particular thing. So we don't need those particular complications, because we would want to disrupt. And when you want to disrupt, you can't bring the same old thing that has caused members not being able to access the money, because they're going to be vetted. You're going to go and look into their credit records and all those particular things. This is their money, for God's sake. Let them access their money for housing. They're not taking it away for some other things, for dignity.
Can one then deduce that since we are having this new two-pot system being introduced, we are likely to see positive reaction from government on our proposal on housing?
Yes, we are likely to see some movement and some progress around that, because the government, with the 1/3, would want to avoid increasing the 1/3 of the savings and then say, okay, fine, let's move quicker on the government employee housing scheme. So we can see that. So it's helpful that we have this particular two at the same time, so that it drives the government employee housing scheme to be concluded as well.
What is it as a union that we can say as we close? What is it that we can say to members about this whole two-pot pension system?
The legalities are there, and that's what Treasury is working on now. But I would also want to say that I hope that when people do use their savings, they use it for something that will benefit their retirement as well. In the long run, we have to think forward about how, when we are 65 or when we're retired, what will our needs be then and not what they are today, because that will affect the entire sphere of how we operate, when we buy things and that type of thing. So just looking further to the future of what we're doing today.
Thanks, Cindy, on that. Really, you have stolen my words. That let's think about it's going to happen tomorrow. When do you need more money? When do you need more attention in terms of your medical requirements as you retire? I don't know if any one of us have had elderly people in the houses. Every day they wake up, there's an ailment. My knee. The following day, it is my heel. The following day is my ear. So every day you're going to hear these things and so forth. So it's part of growing. It's part of maturing. We have listened to our members, Nomusa. We have given them the survey. They have given us their views and their opinions. They have guided us. We have made the submissions as required by the Treasury and SARS, and then those particular submissions were also given it to COSATU, and then COSATU will then facilitate the debate and the discussion at the level of NEDLAC, and then we will continuously update our members on the processes that are taking place and the timelines that may be put by the NEDLAC in terms of whether there's going to be another requirement for oral submission, which we doubt that it will end at the written submissions that we have made, and therefore it goes to NEDLAC because they need to speed up the process of finalizing this particular legislation so that members can have the right to do that. So what we can advise is that, and I want to make an emphasis, Nomusa, again, the union has got no say on whether a member can access their savings or not. It is that individual member to decide, look, I have needs, and I think my needs are extreme, and therefore I need to access the money. And that is their decision. Ours was to listen to them in order to make their suggestion to the legislative processes, which we have done that. Cindy has said 77.5% have an appetite to say we want to access the money. and so forth. And then she also further said that 64% is women who have said that, no, look, we want to access that. And that in itself shows you the desire for them to be able to do that. But more than the desire, it also shows the pressures that are there on the members to be assisted and so forth. And we believe that they will make those decisions as individuals without any pressure, without any influence. But they must be aware of the sharks out there who will come and, push them to say, we can help you here so that you access more. They must stay away from these so-called financial advisors on this particular matter, because this is going to be regulated by an act of parliament, and therefore the information will be accessible, it's going to be public, and they need to also be careful that they also follow that particular information. Once it kicks in on the 1st of March, their sharks will be following our members because they would want to also get a bite on our members' money. So we want to warn them now, please, once you decide to access the money, please stay away from the sharks, stay away from the so-called financial advisors on this particular matter. Rather, we are going to work hard to making sure that our office is able to provide information for free, because we have got to serve the members, and we are going to do serving the members. Thanks, Cindy, for clarifying as well for this technical and legal stuff.
We close the show on that note. Join us again next week as we tackle the same topic, but we'll be zooming in on the issue of how the two-pot system affects divorce. This is SADTU Online TV, coming live from Matthew Koniwe House. This is Nomusacembi, your host. Amandla. Sifuna makabane